Hey, today we're going to go over 13 high quality stocks at massive discounts. And when I say massive, we're talking about in the last 2 years, the high to the low. Some of these are 94, 95% discounted. I'm also going to be dropping some serious alpha on one of these 13 stocks that you won't want to miss. So watch the whole video. I'm not going to say which, but one of the Magnificent Seven is planning on doing something with them, actually in the process of that. Okay, and their ETA is to do something big next year, and that'll impact a couple other big brand names that you know and possibly have. So stay tuned. This is a big episode. We're going to cover 13 different stocks, and as I said, one of them has an alpha alert during the range between the top price absolute and zero and that percentage change. Okay, we're going to look at the range of the last 2 years, which is going to show you lows that you could reasonably expect to see again, or maybe we're at now. Does that make sense? So that's how we're going to look at it today. And let's get started with Salesforce. There's a link below in the description. You can click it and open up my app. It'll take you directly to the assets that I'm talking about in the video so that you can follow along. Okay, it'll open up these multiple time frames and the indicators, and you may need to sign up or sign in to see some of the time frames and indicators, but that's free, and your data is not going to be sold to anyone. You don't have to worry about that. So I'd encourage you to go to smartmoneycharts.com and sign up. Use the link below in the description. So let's get into Salesforce. CRM. Okay, so CRM on the 2-year range is 94.8% discount from the low to the high. Okay, that's an incredible discount. You can see that we're at these lows here. It's been at this low once in the middle of 24, and then again, and then again. Okay, and if we go look at the 3-day chart, you can see it's been bottoming out at these low standard deviation z-scores, 2.9, 2.5, 2.3. Okay, you can see it bottoming out. There's a lot of wicks, bullish wicks. There's a div, a bullish div. Okay, and then here we're getting a nice little bounce. Could be the beginning of a bounce. You can see that on the stochastic RSI, it's also bounced up from these lows. Okay, and you can see on the momentum, the DMI, it seems like we're forming a top in the bearish momentum, possibly. Okay, and hopefully we'll see a reverse, but this is like an investor grade area, okay, to get in at a massive discount. This was at $362 and now it's at $225. Okay, so this is the bottom of the range for the last few years. Okay, so let's take a look at Mara. Mara is a Bitcoin miner. Okay, and so when Bitcoin goes down, you're going to see that related things like Bitcoin miners are going to go down, maybe more so. And so we're seeing a very similar thing here. Okay, you've got this nice low 10-day TDI. Okay, you've got stochastic RSI also looks like it's bottoming out. On the 3-day, we can see that it's already starting to curve back up. You've got a nice TDI shark fin developing here. Okay, and you can see this double low right there. Okay, you're at the bottom of the Dairy Watson on this 3-day chart. So this is a great area to consider a fabulous discount to enter. You can see on the daily we've got a negative 2.2 standard deviation z-score, and there's a bullish div. Okay, divergence. So that just makes a stronger case for maybe looking at this as a good entry. Okay, long. Okay, another fantastic name. I mean, it's unbelievable, this discount. LockheedMartin, LMT. Okay, so LockheedMartin is 88.5% off on the 2-year range, which again means from the high to the low. Okay, this is 88.5% off. Okay, that's a pretty good discount. Okay, the Lockheed Martin, they make stealth jets, weapons, vehicles, all kinds of things. It's probably not going away. So it's a great company. I think that this kind of discount is amazing. So let's look technically. Okay, we came off of a -3 z-score. Okay, up to 2.3. Now we're back down at this 3-day in Daria Watson. And we're at this 786 fib level just below it. Okay, we're bouncing off of the TDI Bollinger Band, which is a fancy RSI. Okay, we're low in the stochastic RSI range. Let's see, let's look at the daily. So the daily, you just had a massive bullish divergence come in. Okay, it came up a little bit, it formed a lower low. I have friends, traders, say this is an amazing setup. Okay, when you get that slightly lower low, that's when they're going to reverse it, because they're in essence taking out some of the people that were bullish here. And this is where maybe it's going to really play out. Okay, so that's LockheedMartin. Let's take a look at another Bitcoin related asset that is at a massive discount. Let's see if we can find it here. Master. Okay, so Master is at a point where it's just at such a ridiculous discount based on the range that we've had for the last few years. Okay, so let's look at, so the 10-day chart, you can see you're at a -1.5 z-score, you know, and you can see that that's the only one in this whole 10-day chart closing range. We're between the 618 and the 786 on Master. You can see this is about to form a shark fin. Look how low it is for this multi-year period. And when it curves up here, that's a shark fin. It'll get detected one tick after, okay? But you can see that it's already forming, so you can get ahead of it. You can see it's bottomed out on the stochastic RSI. It was once over $423, and now it's down at $179. Okay, so with the 3-day in Master, you could see that the shark fin's already starting to form. Okay, we're in that golden area here for the discount zone, and you can see that in the momentum range, it's kind of topped out on bearish momentum, it looks like. You can see that this is a kind of a maximum area. We've been here before, and it's probably likely to reverse. You can see the stochastic RSI bottomed out. It's crossing up on the 3-day, which, you know, you can see for free on smart money charts. You would have to pay on TradingView to see these, and you'd have to pay a lot to have all these indicators up. So it's a fantastic entry, amazing, because it's amazing discount. Okay, again, Master is 71% discounted on this range. Okay, that's pretty good. Let's go ahead and take a look at another one. Let's see, Coin. And you see how wonderful it is? You can just scroll up and down and see these charts, and you can very quickly get a read on the market, all the assets that you love. That's one of my favorite things about smart money charts, why I made it this way. You can scroll and you can compare assets very quickly. Okay, so let's get into Coin, which is Coinbase. Okay, so Coinbase is discounted almost 55% on the 2-year range, okay? And 60% on the last 4 months. And in the last 30 days, it's gone down a lot. It's 86% off of the high from 30 days ago to the low. Okay, so these are, again, amazing discounts, and you can see that it just came and flipped the super trend, okay, which is a target for a lot of algorithms, and then sometimes it'll follow through a little bit more, sometimes it will reverse right after that. So let's see what we can see. The stochastic RSI has bottomed out, and I'm expecting a cross up on the 10-day. You can see that the momentum is slowing down and starting to cross with the bullish. Okay, they're converging is what it's called, and this can play around for a little bit. What we need to do is look at a lower time frame, get a little bit better resolution. On the 3-day, you can see that it got a -2.5 z-score, which is the I measure the standard deviation from the 50 MA, this blue line. Okay, and you can see it touched this Fibonacci 618. It formed a shark fin right here, came down below the Bollinger Band of the TDI. It's coming up, that's bullish. You can see that it looks like there's a top on this momentum and a bottom on the bullish. Be expecting them to reverse, and the stochastic says the same thing. Okay, now another thing that we have on the daily is this huge, okay, bullish divergence. Okay, and a lot of times following that, it's going to pump, or it's going to retrace a little bit and then pump from there. Most common scenarios that I've seen after years and years of looking at these and analyzing them with algorithmic backtesting suites like Vector BT and some other complicated things I won't bore you with. But that looks pretty good. And let's take a look at the next one. Okay, another military, Boeing. So let's have a look around Boeing. Where are you at? There you are. Okay, so with Boeing, you see very similar things, huge discounts. Okay, and then with Boeing, what we're talking about here is a 54% discount on the 2-year range. The 2-year low to the 2-year high, we're back down 54% off of that range. Okay, and on the last 30 days, 77% discount. So that's pretty good. Let's get into the charts real quick here. You can see that it came up on the 10-day, this 2.3 Z-score away from the 50 MA. So likely to retrace, and it did, down to the Dario-Watson lower. You can see on the candlesticks, you've got this, you're at the 618. Okay, you can see that it's starting to form a shark fin. It's a little bit higher than what I would want, but when it comes down here and goes up, that's a shark fin. Let's see, the stochastic RSI, okay, you can see it's bottomed out. All right, so we're expecting a little cross up. You can see that on the 3-day, it's already showing that cross up. Okay, and that's why you do this multi-time frame analysis, and you look at multiple time frames together, and this app makes it very easy to do that. So, all right, maybe a shark fin here is forming. Yep, negative 2.2 Z-score. You're in this golden area here between the 618 and the 786 discount, the Fibonacci. And then on the daily, you've got this negative 2 Z-score, right? It's already starting to reverse. Okay, so, and here's what I was mentioning before. You get this divergence, okay, and then sometimes they'll dump it one more time, okay, maybe take out some of these early longs, and now you're in a position to get in at a better price. Okay, and that's what's happened here. Okay, and you can see this momentum, bearish momentum, seems to have formed a very big high and it's coming back down, and the bullish momentum formed a low and starting to come up. That's what we're looking for. Okay, so next, Qualcomm. Okay, let's take a look at Qualcomm. So Qualcomm is a chip maker. Okay, a big in electronics, 53% off on the 2-year range high to lows, and 60% off on the last 30 days highs and lows. So big top 100 NASDAQ company, and you're getting in a great deal. Also at the 618 level on the 10-day, and let's have a look here. Okay, this, I don't know, maybe this comes down a little bit more. Sometimes they have a tendency to come back down like a magnet. This super trend just draws them in. I don't know. We'll see. Let's see, 3-day. Okay, there's a little bit of support. Stochastic RSI, that's low. Crossing up, it's a good sign. And then the 1-day, maybe we're going to get a momentum cross here, take things up. It's always great to go with momentum, and one of the main ingredients in this system, in this application, is momentum. Always paying attention to momentum. Momentum is the best backtested strategy that I ever did. It gave me 300, 500% gains on different things in short periods of time. And when you're going with momentum, Okay, it's probably the safest way to go as well because you're going with a new trend on the change. So we can see that the momentum is bullish on the weekly and the 3-day, but it's bearish on all the other time frames. Okay, I don't know. I don't know. This, I wouldn't rank this the highest, but if you're into Qualcomm, you're getting it at a big discount. Okay, so here is the alpha, and it's for Qualcomm, which makes Qualcomm look a lot more bullish. Google will be releasing new laptops running aluminum OS. Okay, and they have partnered with Qualcomm to deliver high-powered, AI-enabled, long battery life CPUs for these new laptops. Okay, to compete with AMD and Intel and Apple laptops. So this is a big deal, and it's launching next year. Okay, so next up is Merk. All right, so let's have a look at Merk. Okay, so Merck is a huge pharmaceutical company, as you probably already know. It looks like it's already made a big move up. Okay, and this would have been your signal here, okay, with the momentum change. You can see that the momentum was flipping back and forth for a while here on the 3-day chart. Okay, so you wouldn't have really lost much if you just went in and you went out, you went in and out, right? What you'd want to do is combine it with this low area, okay, and these z-scores. So like that's a massive negative z-score for a bullish reversal. Anything that's between 2 and 3, and this looks like it was 3.3. That's pretty big. You got all these bullish wicks coming in here, and then it took off. Now there is a 3-day bear shark fin, so maybe it's worth holding off. Okay, and you can see that it looks like it already formed this. Yeah, that's the bear shark fin right there. Okay, and it's starting to come down. So maybe if you wait on this a little bit, a few days, you might be able to get a better entry. You can see that it came up, and it's at this upper end area, Watson. Okay, you've got these red triangles above the closes. You can see how beautiful a trade this would have been, though, if you would have taken the momentum. If you were watching my app, you would have gotten the daily momentum flip, which occurred right here, okay, in the middle of last month, and you could have rode it up from what, like under 90 to 105, over 15% gain, up to the Derry Watson upper. It would be nice. That's a nice move for a couple weeks. Okay, and let's see. So, and just to remind you, Merk, it's 52% off, even right now, of the 2-year range. But like I said, it may come down a little bit more in the next, maybe this week. Okay, so let's see, Merk. Okay, so Regheti. So anyone that's a fan of quantum, okay, they're all about quantum data centers. Some people say it's hype. Some people, see it as just the future. Well, if you were buying at the top, well, that wouldn't have been very good. Okay, but fortunately, this would have been, if you're using my app, alerted you not do that. And now it's actually at, I think, a second chance entry for those that missed out. Okay, you have an idea of where it could go, and that it may be an emerging market. Okay, a lot of people are saying that they want to combine AI with quantum. I studied quantum mechanics. It's interesting. They're making all kinds of advancements, and for certain applications, specific applications, it can do stuff that's worth the effort, but very specific scenarios. The trouble is they have a lot of trouble making algorithms, okay, that'll actually work and are useful, and it's a very specific use case to optimize. You find optimizations of scenarios that would take a long time for a regular computer to go through one by one all of the different variables, parameters, or with chemistry, solving how proteins and other molecules shape is. But okay, so let's get into the charts. Okay, so we've got this bearish momentum on everything except the weekly is still bullish. We've got this great retrace. So you're basically looking at 50% off, okay, right here, you see? even a little more if you look at the 3-day on this 2-year range. Okay, so from the lows of just under $1 to the highs, that's pretty good discount right there. And then in the last 30 days, almost 94% discount. Okay, so let's look. So on the 10-day, you're at the bottom of this Bollinger Band of the TDI. You're at the bottom of this Stochh RSI. They're going to cross up. Okay, let's look at the daily. The daily is right. You're at that 618 sweet spot. A lot of people go in. You've got this almost shark fin about to curve up. That's nice. You want to see that. You've got this very low stochastic on the 3-day. Let's look at the daily. The daily, you're at the 786 discount. It's prime. Anything between here and here, you're getting in at a range where they were getting in, a year or two ago before all this pumpage. That's a pretty good opportunity if it's something that you believe in. Let's see. Yeah, I mean, just the discount is so good. If you were wanting to get into something, this is highly discounted. Do your own research. You need to, obviously, you can use AI and ask about it. Why is it down? Is there a reason? How does it stack up against other quantum assets? And I think you get a lot of great information that way. Do your own research. Okay, let's take a look at another one. Okay, so SMCI, Super Micro. Let's see, where are you at? There you are. Okay, so Super Micro, they are they put together data centers. Okay, and my understanding is that this has been a little slow for them in the AI data center. There's a lot of competition. Okay, you could obviously check the news on them and see if it's something that seems worthwhile. They are a big company, I think like $60 billion, something like that. You can see that we're at the bottom on the TDI, we're at the bottom on the stochastic. We're at a huge discount. Super Micro is 85% off approximately on the 2-year range. Okay, so you're in this zone where it's almost the best price that anyone could have gotten in years, right? 2 years. Let's take a 3-day, get a little bit better look. Okay, so you got this negative 2.2 z-score. You're at the bottom of Derry Watson. You can see that there's been a lot of bottoms here. Okay, that's where you're at now. You've got this crossover from low on the TDI and also the stochastic. This is on the 3-day charts. And on the daily, you're still at that low area. Okay, you've got this bullish divergence here. Okay, where this is a lower low, this is the high. We talked about this before. And then, it starts to take off, it bottoms out. You've got these bullish wicks, indicators, these red triangles on the candles. It's interesting. Okay, let's see. So, okay, UNH. Let's take a look at UNH. So UNH is United Healthcare. It's gotten some interest since Warren Buffett said that he was putting money in, even though he's got a lot of cash, and it's been massively discounted. Why? Because the feds opened an investigation into some of their activities, their fraud, and their use of AI allegedly to deny en masse claims, and then turn around and reinvest the profits into stock buybacks for their shareholders and board to pump their profits. And yeah, that's pretty nasty, gross. I don't like it. It really wasn't covered much in the news, which is odd because allegedly it's very fraudulent because the paying customers, were not getting what they were paying for, right? They were getting like 90, 99, allegedly percent of their claims automatically denied because it was so hard to get back into. And, the team that did that, man, shame on them. Yeah, the feds opened up an investigation. Michael Burry ran into a huge short on it, made a ton of money. And you could see there's just a massive drop off, okay, from like mid 600s, 625 down to 250. And I think Warren Buffett was getting in around here, was according to the news. And it's the largest, I believe, health insurance provider for Americans. This is massive. You think about a scandal like FTX or Enron or Bernie Madoff, all right? Dude, these are nothing. These are tiny, small potatoes compared to the biggest healthcare provider in America, insuring, I don't even know, like half of Americans or something crazy. Massive. This is massive, which is really shady, weird because they didn't cover it in the news. I heard a lot of people cover it, and they only talked about what happened to the executive uh, unalived in New York, but they really nobody covered their activities and the Fed investigation. And man, it's dirty, but still, it's a huge company. It's undervalued, I guess, is what Buffett was thinking. Now it's already back up to 325. Okay, and if they're able to salvage the disaster, then maybe this is a value. Um, I mean, insurance isn't going away. You can see, interestingly, on this 3-day chart, okay, you see this bullish div that I told you, like, here's one, okay, and what happened? It pumped, right? But it pumped right into where probably Michael Berry dumped it, okay, and everybody started shorting it because this is that whole federal investigation time, okay, and came down here and, oh, well, there you go, another bull divergence detected, which are alerts down here in the ticker. If you were watching it, you would have seen that. And then what did it do? It did a pretty nice pump. I mean, 230-ish to 380-ish. That's huge. That's like 50%. Okay, so it came back down a little bit, and now it seems like maybe it's getting a little bit of support. How do we know? Well, we could look at the lower time frame. So this is the daily again, and here's a bullish divergence. Okay, now this looks like it's maybe going to cross down. Stochastic's a little bit high, so maybe it's just going to come right off of this white gray like super trend line here, come back a little bit down, and then this is the zone you'd want to be maybe thinking about a value. It's a value. Okay. Now another one of maybe my most favorites is NuscalePower. Let's take a look at it. Here you are. Okay, NuscalePower. So NuScale, as I covered in another video, if you missed it, check it out. I covered Oklo, NuScale, and 2 nuclear ETFs, all related to uranium and power generation. NuScale on the 2-year timeline, high to low, it's still 67% off almost, and in the last 4 months, 85% off. In the last 30 days, 97, almost 98% off. Okay, so this, if you wanted to get in on power generation, nuclear, an exciting area, especially with all the AI data centers and whatnot, clean energy, right? It's exciting. And you're getting into the low. That's what you want to do. You don't want to buy the top. You want to get into the value area. So this is the previous low, and right around $12.50. And we're getting close to there, near there. May not go back, okay? Just because you want to doesn't mean it will. You can see the TDI is forming a shark fin on the 10-day. That's huge. And stochastic, very low, okay? And you can see these are just coming together like they're going to kiss and then reflect off. You can see just like it did here. That's what I'd expect to happen. I would say it's probable. I mean, nothing's guaranteed. But you can see it exactly what it looked like when it happened before. And then whap, boom, took off. Okay, massively, right? Like over a double. So a little higher resolution. We're going to look at the 3-day. Okay, so we're negative 1.9 on the standard deviation z-score, and just below the Unidari-Watson. That's where you want to see a reversal. You'd be expecting it. This is on the candlesticks. You can see that there. And it's funny how it kind of flipped a super trend right here, and then it came right back up, touched it, right, and ran away from it. I told you it works like a magnet and then runs away if it doesn't flip it. So, okay, so that's going to be a shark fin forming on the 3-day, and stochastic super low crossing up. So it's just more bullish confirmation. You stack all these things together to increase the likelihood. Okay. Let's see, on the daily, it just looks like you can see this area zoomed out a little bit more. This area here just spread out, and looks like it's bottoming. It's probably likely, this is where people are expecting it to be the maximum discount that they're going to get. Could go down more, but it's good value. It's good value. Like I said, just based on the percentage discount. Okay. And then finally, one more. Okay. BlackStone, which is like a little bit smaller version of BlackRock. Okay. And I looked into them a little bit. I think maybe they're down because they had some earnings misses, some kind of deal with, a foreign company they wanted to get involved with, fell through, they didn't go in. And so the earnings were just down a little bit last quarter. And, I would say that technically you could see that it's bottomed out. It's bottomed out here at this between the 618 and 716 discount zone percentage. Okay. And you can see the stochastic has just crossed up on the 10-day. So that's good. It means this is a value area, most likely. You can see a nice bullish wick here, okay, on the 10-day. On the 3-day, we get a little bit more zoomed in. You can see that bounce off the 78% discount line, okay? It's a higher low than it was here, okay? And let's see, we can see stochastic's going up a little high, but it can just kind of wiggle around in the top, you see, like it does here, and keep going up. Just because it's up top doesn't mean it's going to reverse right from there. You see, this whole time here, that's when it was going up. Okay. Anyway, let's look at the daily. So daily, you're still at the bottom of this range. Okay. Again, you can see these divs. Okay, telling you things are slowing down in the bearish direction, starting to reverse up. You get multiple divs coming in here. All right. So if you want, again, you want to look at it yourself, different time frames, go ahead and click the link in the bottom of the description below the video, and it'll take you to this website, smartmoneycharts.com, where you can sign up free, at least for the rest of December. Okay, and you have a free account, and you'll get the 3-day and the daily and the access to all of these indicators, okay, which is going to cost you between $50 and $100 a month with TradingView to have lots of indicators and multiple charts and these special time frames that are extremely useful. So go sign up, smartmoneycharts.com, and keep an eye on things. Try it on your laptop, on your tablet. It's fantastic on a 4K HD TV, okay, because you can see 60 charts and indicators at once and compare things. And you can move things around with these drag and drop and up and down arrows. You can go to the settings and change what you want to see. You can click on the quick start and have an easy go at just looking at the Magnificent Seven, some other things in timeframes that you might be interested in. So go to smartmoneycharts.com, check it out, and have a great day.